Oh, is that what it takes? And thank you very much, and welcome everyone to the convening of this Special Economic Service meeting, July 19, 2012. The Special Economic Service Group was established by legislation to provide an opportunity for cross-pollination, you might want to say, with looking at the management and operation of the government of Guam from a financial point of view. The group is tasked with looking at the finances of the government and making recommendations for financial policy for policymakers within our government of Guam. As I mentioned, we have with us the members of the group, the chairman of the Committee on Appropriations, myself, Director of Office on Finance and Budget, Mr. Chris Bodassi, to my right. The public auditor, Doris Flores-Books, is also a member. I'm not sure if she has anyone from her office here. Director of BBMR, Mr. John Rios, represented by Mr. Steve Guerrero this afternoon. Director of Department of Revenue and Taxation, Mr. John Camacho, welcome. Director of Department of Administration, Benita Manglonia, represented by former Vice Speaker Tony Bloss and Deputy Director of DOA at this time. Administrator of the Guam Economic Development Authority, Mr. Carl Pangilinan, thank you, sir. Chief Economist, Department of Labor, Gary Hiles, is here. The Chief Economist of the Bureau of Statistics and Plans, Mr. Albert Perez, that sent a note that he's been out on some pre-approved leave at this time. The Administrator of Research and Evaluation, Ms. Debbie Bossa Phillips, is off island, but is represented by Anna Sid, right? Okay, thank you. Just wanted to make sure I got the name right. Thank you, Anna. And so we want to thank everyone for joining us this afternoon. We had sent out the agenda earlier to try and get some issues resolved in terms of looking at as a prelude to the budget. We wanted to kind of take a look at where we're at today with regards to these budget items, looking at expenditures and revenues, and then hopefully at our next meeting we may go further into the examination of the proposed revenue numbers for the FY 2013 budget. Before I continue moving forward, I want to thank, of course, members of the legislature and my colleagues who are here with us this afternoon. We have Senator Tony Ada and Senator Christopher Duenas. Thank you very much, gentlemen. Welcome. And of course, I have the Vice Speaker and Acting Speaker of the Legislature, Senator B.J. Cruz. Thank you very much, ladies and gentlemen. As I mentioned, the reporting of the Government of Guam financial situation is very important to us, and of course, what we've been looking at and kind of focusing on, especially in this administration, which I certainly like, is rather than just focusing on budget, we're also focusing on cash. And so the reporting of the financial statements, primarily the cash collections and deposits, are very important and integral to us understanding why we are in a situation with regards to government expenditures and so forth. My one dismay is that we still haven't been able to get timely cash collection reports coming out of the administration. As you know, the legislature had passed, with the assistance of the existing governor in past legislatures, mandated reporting requirements on the cash position of the government of Guam. If you recall, in Public Law 3177, Chapter 23, the administrative provisions, we actually outline the required reporting of the cash position of the government with the collections of the revenue streams that we experience. We still haven't been able to see that on a timely basis. However, we've been able to make some headway in terms of taking a look at what's being posted on the AS400 in the transactions, and from what, and of course the BBMR reports that are issued. The BBMR 2012 revenue tracking through May, which are the actual numbers, shows general fund revenue collections about 17% higher. than FY 2000, or 7%, I'm sorry, 7% higher than FY 2011, or $30 million higher than FY 2011. These are the cash collections, once again. And the general fund collections, looking at the reports issued by BBMR, also shows the general fund collections are also tracking $15 million higher than the projected revenues and the appropriated expenditures of the government of Guam. And this number, though, I want to stress, is the gross revenue numbers. And when I say gross, we kind of always say, this is our operating budget, and then this is the set aside for refunds. And are we collecting enough money to fund both? Well, the $15 million tracking higher is inclusive of the income tax refunds. So it's not the operating budget appropriated for the government of Guam, it's the operating budget plus the set aside for refunds that is higher according to the revenue tracking numbers that we're seeing coming out of BBMR. Despite this $15 million higher in general fund revenue, we're still getting the message out there that cash is not available. And so we are baffled by this because of how far ahead we are with regards to cash collections versus appropriated expenditure authorizations. And so we want to continue to try and ferret this out and take a look at this and see where where the cash is being deployed. Especially because, you know, my broken record of why aren't we paying refunds if we're collecting the money to pay the refunds? Where is the money, where's the cash being deployed? And looking at these numbers, there's no reason why we shouldn't be paying the refunds as projected and as set aside in the cash budget that was developed by BBMR and DOA and this administration. So we continue to try and look at that and try to see where we're going. You know, despite the continued insistence that the current cash is paying down the deficit, we're not seeing it. The cash that's being used to pay the deficit is borrowed money, the bond proceeds. As you know, we've all incurred about $300 million in bond funds and borrowing to pay off the deficit consisting primarily of past due income tax refunds. So the cash being collected is not being used for that purpose, and the cash that's using to retire the deficit is borrowed money, then where is that cash that should be dedicated to the additional payments and refunds that we would like to see occur? We know, in looking at the AS400 as of yesterday, that the government's financial system is showing that only $24 million of prior year expenditures have been paid using the current year's cash collections. So when they say we don't have the money because we're using the cash that we collect here to pay last year's debt, only $24 million has been posted in the AS400 to pay prior year obligations, but we are ahead in terms of collections. And $15 million of this prior year payments have been to entities such as UOG, GCC, and the court in giving them last year's carry forward balance. So that's where we can at least look at the expenditure of $24 million. $15 million has been the carry forward balances for institutions like UOG, GCC, and the court. One of the things we're looking at, of course, is just taking a look at the cash deposits and the deployment of the cash and where these cash balances are, and to try and get that at the earlier portion of this fiscal year. We had an SES meeting, and at that time we were informed that the Office of Finance and Budget would be allowed real-time access to the bank accounts on a read-only basis to just monitor the cash deposits and movement. And I think this is the same kind of information that the public auditor has indicated she has asked DOA to produce in terms of these cash balances. The statute, of course, sets out which reports that should be filed for this. And so the role of this Special Economic Service is to assess the financial condition of the government, but in order for us to kind of carry this to its full intention, I think it's important, especially with the administration focusing on cash collections, that we get these reports and we're able to look at that in order to proceed with making some proper planning and recommendations for the operations of the government and the structuring of long-term debt that has taken over the last year. We kind of went in with that, just knowing that we needed to pay it, we wanted to pay it, and I think everybody agreed, and we moved forward to that. But we certainly wish we had a little bit more information prior to moving on that. So that really is, and so today we'd like to, as our agenda looks at it, focus on the position of the government of Guam. And the first item on the agenda, before I proceed, I'd like to thank the public auditor for joining us. Welcome, Senator, also. That's okay. So the FY 2012 general fund revenues, we've actually have, I think at this time, should be able to see 8 months of real-time collections. And then what we're kind of looking at to see if BBMR has looked at this, Steve, is what's the projection given your current collections plus your 4 months out to end the fiscal year?
Thank you, Chairman. Just to start up, I was just told to come up here this morning. So I'm having a report being prepared right now to update basically the information that we received to include all the way up until May's revenues collection. Mm-hmm. I'm having my staff right now compilate all that information. They told me they'll give it to me in about 30 minutes. Mm-hmm. I didn't want to be late to the meeting, so I came here without the report, but to ask your indulgence if you can hold off until maybe about another 30 minutes while I get the report where I can actually report out to the committee in that particular area.
Okay, all right.
Hey, Steve, is it going to change from this report up on the screen? This is the May CRER comparative revenues and expenditure report.
Well, right now we were doing the report for the month of June.
Oh, okay.
And I didn't want to confuse the two reports, so I just asked them to try to focus more and have it in as of May. Okay. So we're all on the same.
Okay.
Because I didn't want to report the June one, and then we're
Sure.
looking at the May report, and then all the questions are going to be asked.
Okay.
Okay?
All right, so we should have something shortly on
Yes, thank you.
Okay. The next item we wanted to just take a look at is the Section 2718 fund. And as everybody knows, this is the health insurance rebate issue. What we wanted to take a look at this, and the question we wanted to see, and please, anybody who has any additional questions or information that they want to provide to the group here as we move along, please just make sure that you interrupt or participate and jump in to this conversation. What the interest we have here is, number one, has the government received any of the rebate that is supposed to be paid, John or Tony, at all?
I believe the law requires by August 1st, so I'm not sure we receive any of it.
Okay.
Senator, at the same time. next week, we should give you the information as requested.
Would it, I guess what also we wanted to know is, would you have, as part of that analysis or reconciliation, can you give us what the government's share of the rebate would be and what the employees' share of the rebate would be?
That's
Is
right.
that part of the work you're performing?
Exactly, we're doing that right now. In fact, the last a few days, we put all our efforts in that, as well as I guess we're preparing ourselves for that meeting that happened yesterday, and so I guess we have lack of our staff. Some people are on vacation, and some of our staff are over there at the Association of Government Accountant conference, and so we have to bring them here to try to get the data information for you as soon as possible. And so if you give us some time next week, we're working on the rebate issue, and we're doing that right now, and we can give you, hopefully we can give you something sometime next week, whatever that's available I can give to you.
Okay. Anybody have any additional comments or questions on that issue? Okay. The Series B bond proceeds that were not used for income tax refunds and the retirement fund debt. There's a portion of the Series B bonds that was 18 million basically that was reserved for or allowed to be used for health insurance. Have those proceeds been drawn down from the bond proceeds and have they been put into the general fund, or what is, Kathy, Tony? It's still with the trustee. Okay, so that amount is sitting there at this time. Now, do we have any idea of?
This comes as a surprise, but I thought all the monies were expended because when we concluded the audit, there was still $30 million in unpaid 2011 tax refunds. So this comes as a surprise that there's still money being reserved for something else. So I'm interested in being more enlightened about this conversation.
Okay. Yeah.
I can give you the status, Senator, Mr. Chairman, and Doris. I guess I can give you a response sometime maybe next week if you like.
Sure.
I give it the data we have.
You're going to force me to call another meeting next week?
Yes, sir.
Okay.
I'm sure you're going to call us anyway, so we'll be prepared on this sometime next week. So.
All right, okay. Roman numeral 2 is of course, wherever there are revenues, if you're a government, there are expenditures. So, Steve, is part of the work being done now also to take a look at the expenditures in the report you're compiling? Because, we have 8 months of expenditures that are actuals already, and then how are we projecting to finish up for the fiscal year?
Yeah, the Bureau right now is compiling the projection analysis for all the departments as of hopefully June 30th.
Mm-hmm.
Once we compile that and summarize it, then we'll get a better picture exactly what the potential shortfalls will be by the end of the fiscal year.
Mm-hmm.
The only thing
Or
we can
surplus, because there's a...
or surplus.
Okay.
But right now, it would be too premature for me to tell you exactly what that amount would be without that report.
Mhm.
But right now, with what's being appropriated and what was allocated, we seem to be holding the line at this point.
Okay. There was also, of course, the 15% reserve that was imposed by the governor. Now, we know that some of the departments and agencies, like DOE, are going to be challenged to meet payroll if that reserve is not released. Has there been any release from or how much has been held back from the 15% reserve? Is that going to be part of the report? And how much have been released from that 15% holdback in order to, implement any programs or continue operations for any of the departments? Any other departments and agencies have received a release of the 15%. I know the governor had committed to releasing it for DOE, because I think he realizes after looking at it that, without that 15, they may not be able to continue. So.
Yes, with the projection analysis that's due by the analysts real soon, that would give us basically a better picture of when their drop dead date would be as to when we would have to start releasing that 15%. For most of the departments, we've been able to hold the line to them. The only departments that I'm aware of that we've actually released any portion of the 15% reserve was for GCC and mental health because of the court order. Anything else, basically, we've held in abeyance. The other ones that I know that were other appropriations that I know that were released were those appropriations not under the Bureau's allotment, which is basically with the Department of Administration. But those are for the medical, life, dental insurance type of issues. Those we already knew since the get-go that we would have to release that early on. But right now, those are the only two agencies that I'm aware of that the 15% has been released. Portion of it, at least, not all.
Okay, all right. One of the things that we hear as challenging government operations in this fiscal year, using this fiscal year's cash, is that we've used this year's cash to pay for last year's prior obligations. And once again, as I mentioned, when we've looked at the AS 400 and we've looked at the transactions codes on what's being paid, we could only see that, is it $24 million of prior year expenditures being paid with this year's collections. And so can we, is there anything else? Tony, can you look at that and see if we missed anything? Because, I mean, we hear this $40 million where, we have to spend $40 million because of the shortfall, $60 million, whatever. But when we look at the real numbers of what's been used at this time from the transactions, we can only find 24. Madam Public Auditor?
Senator, what's really been very confusing and very hard to translate from cash to the actual condition,
Right.
And now that the 2011 audit has been issued, I tried doing this with the 2010 numbers and was way off, and tried doing this now with the, now that we've issued the 2011, trying to do it with the numbers. Well, 2012 looks like it's favorable because, right now as of May, it was, $12 million better than last year, and I think the previous months even showed it as high as $20 million to the good. It is very difficult to translate the cash to the actual condition.
Yes.
I'll give you an example. Finally, what I've been asking Department of Administration, and Kathy knows this, is to give what we call a preliminary financial statement. To give you an example, when DOA finally did that for fiscal year 2011, the first number showed approximately that the deficit would be around $37 million. All right. Then they made some other adjustments. The books are closed a little bit later, and increasing it slightly, such that the final deficit was closer to $47 million as of 2011. What is not reflected in the cash was the fact that revenues, actual revenues, were almost $50 million to the good.
Yes.
Compared to all the prior years. I mean, this was the highest in 14 years. Yet, despite that increase in revenues, the deficit still continued to increase. At the end of the year, the amount owed in accounts payable, which is a better figure because that's the obligation that DOA has to pay, was in excess of around $80 million. So even though this looks like it's $12 million favorable, we had the $80 million that was owed for all of these existing obligations. Let me give you an example. As of 2011, and the amount of tax refunds owed was somewhere in excess of $300 million. Now, we do know that the vast majority of that has been paid, but according to, prior to us releasing the report, we got the number from John as of, okay, John, now after all the bond proceeds have been left, how much do you owe in tax refunds? And he gave us a number of approximately $30 million, is my recollection,
That was sometime.
as of
So,
June.
June.
Yeah, after the bond proceeds were finished, was, yeah. And so, $30 million is still owed in tax refunds. So the correlation is really very difficult. Now, what I've been asking DOA to provide is some kind of preliminary number as of either December 31st or preferably even March 31st, because that's even, that's at least half a fiscal year to kind of say what those numbers are. And they've been challenged, I guess, for a variety of reasons, and are unable to do that. So while it might appear that the trend is favorable, to just only focus on that aspect is not giving a complete picture.
No, I don't think we're focusing on that. I think we're focusing on the fact that the trend is favorable, and if we confined the collections to pay for this year's expenditures, it's still favorable. Now, what are we paying? Because we know that we're not paying some things. What are we paying? What are we paying from prior years' expenditures and payables with this year's cash collections?
$80 million worth of accounts payable, because that's what the audit showed. And remember now, this is 9 months after the fiscal year. The audit showed that the government of Guam general fund owed approximately $80 million in accounts payable.
But the system shows 24.
Again,
is what I'm
this
saying.
is just a
Yeah.
snapshot in
Right.
time.
Yeah.
Okay, as of that date, I can only, I can only work with numbers that show me a condition. A cash flow
Sure.
is not the full condition, is really
Right.
where I'm saying.
Yeah.
And until DOA is able to give us a snapshot in time, let's say as of March 31st, to say as of March 31st, they still owe $50 million or $80 million in accounts payable and all these other things, it's really difficult to translate those numbers. And that's why, unfortunately, even though we do hear, I've known about this $37 million deficit number since around January, but it really wasn't confirmed until we issued, until, let's say, around early May, when the audit was reaching its kind of like its final numbers, and, just varied. And I won the bet in the sense that, hey, I think this number is too low. And it was higher, unfortunately,
I guess for me to put it into perspective, we had a gross revenue projection of $678 million in the fiscal 12 budget. The latest CRER says we're going to collect $694 million. On top of that, we provisioned $105 million of the $678 for refunds, but we paid $60 million of it with bond proceeds,
Right.
thus freeing up $60 million.
And
So where is all the cash
Where's
going?
that?
That's-
Until DOA is able to provide a financial condition as of a certain point of time, that's more current, we're really not going to know the true financial condition, because this is a moving target. Today's bills, today we pay, a few months' bills, and then we accrue some more bills. So it's like the tide. It comes in and goes out. The numbers kind of vary, but they're all still within the $60 to $80 million range of what is still owed.
Right.
That has not changed
And
significantly.
so where is that additional cash we collected that we should have used to pay the refunds, which we didn't? Where is that being, because we only paid $24 million in prior year. So that's what I'm saying. Where's that additional cash
I apologize, I didn't bring the audit. Maybe if one of the senators here has an audit, I can read down all the different liabilities as of
No,
September
but we're
30th.
but we're talking about this current fiscal year.
In general fund only, we're not.
Yeah.
No, and I'm looking only at the general fund. Remember, $300 million was owed in tax refunds.
Right.
The vast majority of that was paid off through bonds.
Yes,
Okay.
correct.
All right.
And I'm
So
s- and-
that did not change the dynamics.
Right, but what I'm
of
saying,
things.
so we paid that prior year with bonds, and then we're supposed to, and based upon the collections, we should have another $100 million or $70 million that should have been used because our numbers we're collecting that number. We should have had $70 million from this fiscal year to pay refunds on top of that borrowed money, because the revenue collections are there. And if you're saying,
But that assumes that you have no obligations from the
Exact-
past.
right.
Yeah,
And I'm
that's-
saying-
That's the mistake.
no, it's not, because I go back and I look, so what prior year obligations did we pay? And we paid $24 million. So where's that additional difference between the 24 and the 70 that should have been set aside for refunds, because the numbers and the collections were there? We didn't pay refunds. Where is that additional 40 to 50 million? Because we only used 24 to pay prior year, according to, Kathy? Is there any additional information you can shed on this? We'll make one for you. We have one right over there. John will happily relinquish his seat.
We do have quite a bit of liabilities, and some of them are on claim checks from like child support and tax refunds. So those are quite substantial. So they do add up to like 80. And I would like to ask you a question, though. When you say 24 million was paid from prior years, how are you guys calling out the numbers? Because in order for me to respond to your question, I need to know.
These are annual appropriations that were paid with
Okay.
general fund cash
Okay.
in fiscal 12.
All right.
So they
Okay.
could be fiscal 10 appropriations, they could be fiscal
Okay.
11.
Okay, the only reason why I ask is because we need to be mindful that some of our funds are subsidized 100% by general fund, like MIP. So you won't find it under 5100, you'll find it under the special fund number like 5293.
Yes.
Yes, so, and that goes the same for the other funds that are funded by general fund. So, again, we just found out about this meeting. I was in a conference, so I had to come back this afternoon. Okay, so,
Senator, I guess we're getting the detailed prior year accounting information
Yes.
that you want, and we'll make sure you get that sometime next
Okay.
week. And in fact, I asked our staff,
Right.
we're trying to do it on time.
Right,
It's,
right.
I just
Yeah.
received the agenda at about 1 o'clock or something. I called Selena. to
Yes.
ask her. I apologize. for
and
that.
then we have a different kind of report that is specific to obligations that were not supported by appropriations. But in order to follow GAAP, we do need to book it in our financials. And those amount to,
Are you paying those obligations with this year's cash?
we pay them
That's the
as
thing with
the law allows us to, which means that the departments have to identify funding from their current year budget. So as they, identify their budget, we'll go ahead and make the payment. But they're moving quite slow, though. I mean, as far as trying to pay it down. And, okay, am I in the hot seat now?
But I think it would be really helpful if we could get an accounting
Yes,
of all these prior year obligations and these payables
Correct.
that, are
Okay.
being paid
That are being paid.
from this year's collections,
Sure, and
as
I'll-
well as the trial balance that's supposed to be
Okay.
provided.
Yes, we do have a trial balance, but I need, for March, like I promised Doris, it's just, Benita needs to review it before I release it, yes. And regarding the payables, they are, though, we are paying them down. I can see the improvement in the aging. So payments are going out to the vendors, except for those that we don't have the authority to pay for, like the 7 million. And we still have the MWPTC, that's the 24 million. So we, there are other liabilities that are out there that relate to prior year.
Okay,
Yeah.
sure.
There was a comment that we've used this fiscal year. We've used this fiscal year's funds to pay prior year's bills. But next year, even if cash was available because of the timing of the invoices and things, wouldn't there be a certain amount that would always lag?
We kind of roll over about 40 million in payables
And
every month, so
how much would you expect on an annual basis if cash was available that would roll over to be paid with next year?
Well, typically, we should be in a 30-day
yeah.
aging, right? That will assume that we start off zero at the beginning of the fiscal year. Ideally, we know that's not.
Right. Yeah. So,
20,
But to Gary's
40?
So, yes, we average 40 million.
Right.
Yeah.
So to Gary's point, at any given time, if we're showing 80 million in payables, 40 million of that would be a rollover from the previous month.
Madam Public Auditor, are you update, we had sent you I guess a request to kind of take a look at updating the liabilities, and I guess, we know from the revenue tax, it's about 30 million for the, about 36. Right. Okay.
If I may, Senator, okay,
Yes.
I'm looking, this is now the September the 30th, 2011 audit.
Okay.
And the audit, whatever is showed in accounts payable would be the amount that would be used, that's part of the prior year obligations.
Correct.
Okay. So as of the 2011 audit, the accounts payable owed was $85 million. $85 million was owed as of 2011, and that already reflects the deficit. Also from that number, I'm sorry, I was a little bit off on provision for tax refunds. It was $326 million that was owed. So of that $326 million of tax refunds, the December bond paid $198 million approximately, and then the Series B paid, I was told, 60?
Yeah.
70? 90
90.
plus with the cash. Yeah, leaving about another $30 million still owed, was my recollection. Okay. And then the COLA liability was $21 million, so I think most of that has been paid off,
That's
correct? Okay. Okay.
Yeah.
And
Retirement fund was paid off?
the retirement, yeah, because, the temporary reduction of contribution, that actually became a deficit item. And that
Yes.
was 6.6 million. That has been paid off.
Right.
These are all listed in the general fund audit, all
Right.
right, as far as the liabilities. Accrued payroll and other, that's an in and out. And then the due to other funds, that's kind of also an in and out. Okay, so the real number you want to focus on is $85 million in accounts payable. That would have had to been paid, that's prior year obligations. meaning would have been paid in FY 2012. So with 85 million in accounts payable and only, quote, a $12 million variance, we're still short.
No,
And
I,
that's-
I-
yeah.
I understand, but, so we're still short, but because we've collected the revenue, we should have paid out an additional 50 million for for refunds
Yeah.
from
So-
this year's revenues, and we
Yeah.
didn't do that.
Yeah. I
We-
don't know-
We paid,
I'm sorry.
From-
Is
from
this
this
number
year's-
gross or net? Is this number of 268, is that gross before tax refunds or net of tax refunds adjustment? This number here that's on there, is that a gross number, Chris, because you were saying 600 something? I don't know. Is it gross or is it net?
BBMR?
The 268 million that we're looking at, is that gross or net? When I say gross, before we set aside the money for provisions for tax refunds. Okay.
Yeah.
So if you're looking at 455 gross, I don't have the other page, how much have we expended?
Right.
Yeah. Again, believe me, I've been trying to do this exercise every time, and after a while, I get a headache.
Well, the corresponding expenditure report on this, I believe, said we've expended 380 million,
Uh-huh,
Right.
if I'm not mistaken.
okay.
So where's that 80 million?
Yeah, and like you too, when I saw this, this favorable variance, I said, yeah, we should have some cash relief, right? Some temporary cash relief to do other, to play catch-up, right?
Yeah.
And they keep on saying, no, they don't.
Right. So-
And that's why, and of course, like you, I'm a doubting Thomas, right? I want to see the numbers.
Yes.
And that's why I keep on asking, please give us a March 31st financial statement that shows, as of that point in time, approximately how much you've owed, how much have you collected, and so on. So that's kind of like where it is. I understand your skepticism, and I share it, because on one hand, the cash report is showing a favorable balance, but on the other hand, we keep on hearing they're broke.
Right.
Yeah, okay? But I do understand that,
They're broke because they're paying the prior years,
but
we-
then you're accumulating current year that you haven't paid either.
And when we look at it, the amount doesn't match
Yeah.
the overage.
Yes, and I have tried to reconcile these numbers before, and cash reconciliation and actual accrual reconciliation are really very difficult to
24.
reconcile. And that's why I said, just give me your balance, just give me your position in time as of March, how much you say you owe approximately, how much have you expended
Right.
approximately, and then we can compare that to the cash.
Exactly.
And that's the number we're still waiting for.
And she says she promised she's going to get us that. So if you give it to the Madam Public Auditor, can you give us that one too?
Oh, yes.
Okay.
No, you should give it to him first, and then by the time I get back, he would have analyzed it.
Okay.
55 million in tax refunds.
Ye-
Is that-
Yes, but about 20 some of that was the make work pay, the ACTC, which were, the ACTC is paid, that was because we paid all of the prior year. So every single return that we paid for prior year that included an ACTC,
Yes.
we got that.
Yes.
And that's not part of the set aside for this year. That's a separate revenue stream, really, on that. So from this year's collection, and that was a cash infusion from the feds. So from this year's revenue projection numbers and revenue collection numbers, we've only paid about 30-some million from the current year's collection of refunds. So, so keep paying. Okay. All right. Okay. The other, and so we'll get that detail, a little bit more of the detail on the prior year, which I think would be something that, okay, great. The general fund long-range forecast of revenue and expenditures for each year, 5 years, immediately beyond this fiscal year. Steve, that's something that BBMR does as part of the budget process. Yeah, I think, yeah, that's right. Chris has reminded me that Bureau of Statistics and Plans is the agency by statute tasked with doing that.
Yeah, I know John right now is working with with Tommy Morrison on this to update the 5-year projections, the one that was provided, I guess, back in December or something like that. But he said he wanted to basically touch bases with Tommy first before he actually finalizes that report.
So you think we'll be getting that as part of, during the revenue number
That
presentation of the
part
budget?
I don't think so, because I think John wanted to do that actually himself, because he's the one that actually prepared that report initially and
Okay.
provided it to Tommy, and Tommy now basically just has to catch up to kind of input whatever needs to be done on that one.
Yes. Is that something that's going to be available by the next meeting?
I will surely ask the director to provide that, yes.
Yeah. I think by statute it was due.
Okay.
It's overdue now. It's a prior year obligation. No. It's a prior month obligation.
Okay.
No, I don't know. That was in my bill. Okay. And Anna, GVB, I think we got the GVB report. That was, no, we haven't got, I thought I saw that report. Which is the report required for the outlook of tourism.
Yeah. Debbie Phillips is going to be compiling that report upon her return, and she asked me to let you know and the committee to know that she would be submitting it to you folks officially next week, so before the end of the week.
So we'll get that report as well, and we'll of course distribute that to everyone at this meeting today and all the other senators. We wanted also to kind of take a look at the special fund revenues. Again, Steve, are we doing the same kind of projections and analysis on the special funds? Is that part of the, as well as the general fund? Yeah. In looking at it, is there any area of concern right now that you might have seen in terms of these special funds, especially those that kind of fully fund the operation of divisions or agencies, such as customs, and environmental health, fully dependent on their environmental health fund? Is there any areas of concern that you may want to look at that we should kind of
Basically, right now, the only fund I think that we were kind of concerned about is the Manpower Development Fund, the Streetlight Fund, the Flame Fund. Those particular funds are really tracking below basically what was reflected in the budget and what was approved for the revenues for 2012. Particularly in the Flame, I think a total of it says here, let's see, 600,000 was appropriated in Public Law 3177. In our executive request, we only kind of like estimated 77. The tracking to date is only 84,000. And we're already basically, that's 4, 6, 8 months into the fiscal year. So that is a fund of concern. Because, go ahead.
which one was that?
The Flame.
The Flame.
Out of
Yeah.
Wildfire.
Do you have any kind of report? They should have been in at least one billing cycle for the ambulance, right? Has it been over a month since they implemented their billing with the off-island vendor? Remember the off-island vendor that they hired, Kathy, Tony? Do you know if we've had any kind of report from the off-island vendor that handles the billing for the Flame Fund for the ambulance services? I think they're about a month into it, so they should have sent out bills. Yeah, we're kind of curious to see, how that would come out now that they're able to charge for ambulances, and kind of see what the early experience is for that. That'll help us. Okay. Okay. We also wanted to look at the status of the point-of-sale system. one of the things that will help, of course, kind of accelerate the reporting and the numbers accounting for the collections would be bringing the point-of-sale system up. Where exactly are we at this time on that, Tony?
Right now, I guess we're in litigation right now, and so at this time, and I know, I guess this whole week and this last week and next week, there's some depositions and things of the sort. So this is still in the lawsuit, and I guess we can divulge anything that's related to the POS system.
Mm-hmm.
Anything that's related outside of that, of course, we will provide information as requested. So.
Okay. How about the credit card convenience fee? How has that been implemented?
Yeah, that's been passed on since, some time ago, when we awarded Bank of Guam.
Bank of Guam.
Okay,
Yeah.
so that portion of it
Oh,
has
yeah,
been
we don't-
implemented,
That's correct.
and so we're now,
We're not paying anymore.
we're not paying that charge. I know I was off.
Quite high.
Is it?
Yes, because when I was going to pay my my
Yes, it
tax,
is.
I would have had to pay $150. I said, okay, I'll come back later. And I wrote a check instead.
Well, I know that I bought gas, and I had to pay a convenience fee using a debit card even, and even a credit card. There was, of course, the fee that the credit card charges me when I don't pay that balance off. But just the transaction fee, even a credit card, in one of those automated gas things while I was off island here a while back, there was a convenience fee, and they'd ask you, do you want to pay the thing or not? And they looked at my gas gauge and said, yes. Because the next 100 miles is desert. So we're not cutting edge on this. I can assure you that we're not cutting edge on this. That there are other jurisdictions that also realize the cost of that, and that it is a convenience, number one, and then a service, and somebody has to pay for it.
And again, that increased the deficit to the tune of about $3.5 million for 2011. So hopefully that number will go down in 2012.
Okay. All right.
If I may,
Yes.
add something.
Sure.
With regards to the deficit, we have a government accounting standard board that usually we have to record a permanent transfer from general fund where there are special funds that are insufficient, and that we know that there's no way they can cover their deficit. What the auditors do is they propose a permanent transfer.
Right.
So that increases the deficit in general fund. And I know one of the funds that was affected, one that is affected almost every year is the custom and quarantine. And that's been a continued problem every year because their rental, their lease, is never budgeted for. And that ranges to between $2 to $3 million a year.
Well, Kathy, I think the reason why it's not budgeted is they take it off the top. The airport, the passenger facilities charge is collected by the airport. The airport takes their rent off that and remits the remaining balance. And so when we budget the operations for customs, that's already net of the rental charge that the airport takes out. So when you see a $6 million appropriation for customs and quarantine using the customs and quarantine fund, that really is a gross revenue of $8 million because we deduct the two that the airport keeps for rent, and we budget for the operations the remaining balance of that. So I'm not sure why you. I think you need to take a look at that.
Yeah, well, I know for a fact that they do operate at a deficit every year, and I believe what was recorded is about $3 million for 2011 as a transfers out, permanent transfer to customs. Another fund that Steve mentioned that's running into problems is the Manpower Development Fund. The auditors proposed an adjustment to reverse our transfers out to GCC by 900,000 because insufficient receipts. So a lot of things that a lot of things that contribute to the general fund deficit.
Sure.
And that's why our numbers are usually understated, because at the end of the audit, they will look at all the funds globally and determine whether or not the funds is going to be capable of carrying their deficit.
Now, I'm kind of curious then, there was recently, I guess, a fund from one of the special funds was declared a permanent transfer,
That's right.
right?
That's what. I'm
So
talking
after we
about.
declared it a permanent transfer, we reimbursed it with the general fund. Why will we do that if your auditors already determined that that was a permanent transfer?
Well, at certain
Yeah.
times, we do an assessment and we look at the current financial condition of the funds, where they're at. And then before I even book the restoration of the permanent transfer, I do call the auditor just to inform them that, we're going to go ahead and,
So it's a
yes, reverse it.
So it's a semi-permanent.
I'm sorry?
It's not a permanent transfer. Once you've declared it, can you
No,
reverse it?
but this is very rare. We don't do this as a common practice. We do make an assessment of the financial situation of the fund.
So it means that you had more money in the general fund, and therefore you decided to reimburse a permanent transfer? Yes, that's what they did.
Well,
The
it's a
in-
combination of both. There are
Yes.
some funds that have a balance, and
Right.
some funds that have a negative balance, okay? And the end result is normally a negative amount, okay? The end result at the end of the day. So it's not just transfers out, but also transfers in, and that's all reflected in the audit. All right.
Yeah,
Okay.
I guess I'm speaking of just something that happened last month, I guess, in May, the E911 fund.
That's correct.
Right.
Yeah.
It was declared, I'm not sure the appropriate word, as a permanent transfer, and I thought that would close the books on that.
Right.
And yet, then, last month, you reversed it and decided to reimburse it with general fund money.
That I don't know.
Yes, and again, it all depends on the situation with general fund. This year, like I
Yeah, but we're
said-
not paying the tax refunds. Why would you use the money that could go to a tax refund of over $1 million to reimburse a permanent transfer? So,
In that particular case, I don't know all of the facts, but the E911 money is usually used to fund part of GFD's operations, if I'm not
That's
mistaken.
correct.
the
Okay.
dispatch units, yeah.
Yes, and then usually what happens at the end of the year, if it's a debit or, if it's a surplus or a deficit,
Right.
that surplus or deficit is closed out.
Right.
And then we start all over the following year.
Right.
Okay. So it's just,
So-
it's an in and out. See, the nature of this pronouncement by Gatsby is a true special revenue fund has to have its own source of funding.
Right.
And so only a handful of funds like the Territorial Highway Fund, the Tourist Attraction Fund, the
E911,
the
'cause-
E911 and the Special Education, for the real property tax are true funds that have a dedicated source
So-
of revenue.
yes.
All the other funds, like the Legislative Fund, the Superior Court,
Right.
those are just really transfers in and
I-
out,
no,
just to
I
separately account.
Right.
So that's really the difference.
No, I know, but I'm talking about a true special fund.
Right. Yeah, and then the Manpower Development Fund is supposed to be, the revenue from the processing of H2
Correct.
is
Right.
supposed to be coming in, but I don't know,
No.
that fund has
below-
never been consistent,
Right.
from my recollection. And I know, Senator Cruz, you had asked for an audit of that, I know, or something similar. And that's on my long list of to-dos.
Between Senator Cruz and I, we'll keep you busy.
Yes. And going back, Senator, to your request to do an assessment of the liabilities, one of the reasons why it's very problematic for us is because the general fund is a moving target.
Right.
And until I get a number from them that says, as of this point in time, I don't want to work with, because even, that was one of the problems that the auditor said, why the audit was so late, is because even up until the 8th month, they were proposing adjustments as late as 8 months. And there's got to be a time limit as to when you cut off and then when the audit begins. The problem with that, then, it makes it with more audit adjustments as
Sure.
opposed to fewer audit adjustments. So that's why DOA keeps on opening the books, but then we can't really get a handle as to what is the true number if the books are always kept open.
Right.
And that became a finding in this year's audit, because they kept the books open way too long, and, we didn't really get the final number until like June 28th, you know.
And I know you participated in some of these panels and so forth, not only here but off island in some of these conferences. What's your recollection of how other states kind of get these trial balances, get these, cash position reports? I mean,
Most states are, part of the problem is the financial system that DOA is operating with. And this year, in our highlights, we focus on the fact that, if you remember pre-Oracle, or Oracle time, what happened was money was spent to help us stabilize and get back to pre-Oracle, because Oracle unfortunately became a disaster, and was never implemented. And so at that time, it was estimated that would, and that was around 2001 when all of that happened with
Right.
Oracle. And
no
so
Oracle.
no Oracle. Yeah, it was, Oracle was partially
Yes, I know,
implemented,
I remember.
and then everybody
Ready.
wasn't working with
With
it,
it.
and so money was, DOI, OIA money was designated to bring them back to pre-Oracle before, and they were all forewarned that system, which DMR holds, was really not going to last that long, and it's really just being held with, pardon the expression, rubber bands. We need to move forward to a better financial management improvement system that can get, at the click of the button, we can get a financial statement as of a point in time. I mean, Kathy knows that since December, I've been asking, where is this report? And she keeps on promising it to me, but she has yet
Yeah.
to deliver.
No, Doris is correct. A lot of our reports, we have to do it manually, even our financial statements. So, and even our fixed assets, we have to track it manually in Excel spreadsheets. So, according to Department of Interior, they warned us that we needed to possibly look into a new financial management system within 5 years after.
5 years from back in 2001.
2001, yes.
Yeah, and
Yeah.
We can
and
provide the technical assistance very soon, I think.
Yeah.
there was a finding this year just on fixed assets, because, with all the construction that's been happening, and even just trying to determine the cost of the landfill, that's why we're doing a special audit just on the landfill, just to determine how much have we spent there and to capitalize that. But all of this is being done manually as opposed to the system capturing it. And so we're really in the dark ages. So, I was just happy to even get a number for FY 2011 that I could work off to see, when I got that $37 million, okay, hallelujah, but it just intuitively said, no, that's too low. As it turned out, it was 10 million too low. So that's kind of like, I want to see what this number, because my intuition versus the actual, right? You want to confirm it with numbers there, and if it's a deficit, let it be, so we can all have an open discussion as to why. But, and I understand your problem with not having accurate numbers so that we can project what the 2013 number is going to be, because that's going to have a rippling effect also. So, in some respects, you are operating with incomplete information.
As long as we're talking about systems and John, can you tell us what the condition of the system is up at Rev and Tax? I mean, that's where we collect the money, and do we have an accurate way of being able to tell how much or you are collecting? It's my understanding that the system's been down for some time.
We're not really allowed to talk about it, but,
I'm not talking about the POS system. I'm talking about the receipt of, like, even payment of gross receipts taxes, the filing of the taxes to be able to scan all of these things in so we know how much money is coming, and that system's down, right?
and that's because of the POS.
That's because of the POS?
Your scanner system is hooked up to the POS? No, right?
Senator, if I may, there's a finding in the audit about the fact that DRT is unable to scan its data to have it read. There's a major finding, and we commented on that in the highlights about that, because the system that they had worked with the vendor ended up being not accurate, too many mistakes. Is
Right.
that, and therefore they just canned it. And now you're on a manual input system, is what I understand. Is that correct, John?
Yes, if you're talking about receive tax refund, tax refund, basically, I can tell you what we owe right now on tax refunds.
I'm talking about being able to go into a laptop or into
Okay.
your computer and say, Corporation Tony Bloss made X amount of payments in taxes, gross receipts over the last year. They're current, they're not current. My understanding is that you're pulling out boxes to try to prove, or just letting people get their licenses because you can't prove that they have or they have not paid, and they're claiming that they've paid $1 million, and there's no, you guys can't find where that.
And that's true to the POS. In other words, if somebody were to make a payment, it goes into the system. And that's why I'm not really allowed to talk when we're talking about, accounting and all these things. Because we're talking about POS. In other words, if something's not working right, it's because of the POS. That's what I'm trying to say. And I can't talk in terms right now, just like Mr. Tony Blas mentioned that it's under litigation right now.
But Senator, it really goes back to that the system, the POS system is a separate system, separate from the general ledger system. The two have to be married, the reconciliation with revenue and tax, because that's where the money comes in, all of this. The systems we have right now are not working, are barely functional. And that's why it's a continuous struggle to get information as to where we are until the audit gets released. And the auditors spend hours and hours of time trying to reconcile. Part of the challenge, too, is DOA, with lack of personnel, does not reconcile regularly. They just reconcile once a year when the auditors come in. We've had discussions about they should be reconciling quarterly, the major items, so that, that you only have 3 more months to look at. But all of these are the challenges that Department of Administration is facing. And finally, I was pleased to hear that they're going to get, has the grant been approved yet?
We're working on that.
They're asking for money to do an assessment of the current system now, where they need to go. But again, 3 years down the line before that a system like that will even be implemented. We're fortunate right now, if you look at Department of Education, that was, pardon the expression, ordered, and part of the money was provided. Now, starting in 2013, that's going to be all local money. That's going to be another challenge. But at least Department of Education will have, or has in place right now, a new financial management information system.
Yeah,
And-
but that system was unable to discern and stop the issuance of a whole series of checks.
That's right, yeah,
So
correct.
if that system is supposed to be the state-of-the-art thing,
It's better
is
than what they have
unable
before.
is unable to determine that there's an unapproved expenditure, how do we know where all the money that's coming into this department is going? Can we reconcile how much they claim they brought in with how much their claim they've deposited in?
We do that once a year with the audit. That's
And-
how we reconcile.
And between that period, there could be a siphoning of tens of millions, and we wouldn't know about it until somebody was already in the Cayman Islands or some unextraditable place.
Maybe not quite to that extreme, because that amount of money being taken hopefully would be noticed by DOA, would be flagged. But, you know.
But at the beginning of the term,
Yeah.
they
But if
didn't
it's
notice
smaller amounts,
$19
like
million
10
in
but
their own account that was short. So I have real,
I mean, small amounts probably we'll never find. Yeah, I mean, I shouldn't say never. Small amounts are going to be more difficult to find, okay? I mean, you know, a couple thousand here and there every day is probably going to be more difficult.
Yeah, I'd like to make some comments. We do reconcile daily with the general fund checking. We do have online access, and we do have to reconcile daily because of the voluminous amount of transactions. So what basically John is talking about is, in order to determine how much is owed by a taxpayer, or whether or not it's an individual or corporate, the receipts need to be posted to his subledgers, and that's where the POS comes into. I think that we can say to you, so that it explains what John is trying to say. Okay.
Kathy, I just wanted though to say that you've been there, and we seem to have, a couple years ago, gotten more current reports with, you know, so I...
Mr. Chair, if
Yeah,
I may.
yeah.
Kathy, how is the E911 funds tracking with the revenues compared to what was forecast?
We're about...
Yeah, we have the tracking for the E911 all the way up until May 31st. Compare that with the budget law. We're about, shows about 121,000 over. So our tracking is actually higher than what is being appropriated.
I see. And, you know, on the, what's the basis for the projection of the E911 fund? You know, how was it determined? Like on, yeah, like on the phone lines? Is it per phone line times $1 times 12, or
Dollar.
a dollar,
Yeah,
right?
my understanding
Per
for
phone.
every card they issue and stuff like that, they assess a $1 fee. So if you buy 4 different phone cards, it's actually $4 because it's $1 per
Per
card.
card. I
Yeah.
see. Okay.
Oh, that's right.
It's up to 25 on a corporate account, so it's
Yeah.
a max 25, so you can have 1,000, you can have 1,000 phone account, but you're only getting charged 25, so it's not directly proportionate to the number of outstanding subscribers.
Yeah.
Yeah, because of that, that corporate,
And you know, recently legislation was introduced to use the surplus of the 911 funds to, I guess they wanted, GFD supported that legislation. Is that real money, or is that, are we looking at real money that they're looking at to utilize on that legislation?
I'm not too sure how the bill was written or what the language of the bill said. The only thing I can report out right now is the tracking in the actual fund is above what we've actually estimated for the 8th-month period.
Okay. So we are tracking above that.
Yes.
Okay. Thank you.
John, I haven't seen, and it may be just me that hasn't seen it, but we used to get your processing of refunds, how many processed this month and so forth. Are those reports still being provided?
I spoke to Paul July about that, and he said I told him to get updated, and I thought he said he's still submitting it.
Yeah, yeah,
We didn't get anything last week, or 2 weeks ago.
yeah. Because we used to get those, on a regular basis. I think it was monthly basis you filed, right? Yeah,
Well, we were doing it more informally, not
Yeah.
as an official report, I think, but I think there is one due every month.
yeah. Now, John, when you mentioned the outstanding liabilities for income tax refunds, that as of June, they're about 36 million now. Is that just prior year, or is that processed refunds now?
I believe the report is as of July 10th. The estimated, what's processed for I believe, 2011 is around, I just try to add up here someplace, around, just 1 minute. I know I had it in here, but, yeah. For 11, there's what's processed is about $26 million, and for 2010 and prior is roughly about 10 million. So it's about 36 million processed right now.
Okay. Now, Kathy, do we have outstanding checks of refund payments sent out that have been returned?
I know we reported that last time. We're going to have to report it next week. I need to
Okay.
get that information for
Okay.
you. Yeah.
I don't recall getting that report.
I don't remember seeing that.
No, I know the question was posted last
Yes,
year.
yeah.
Okay, so.
I think it was, yeah.
Response to this letter.
It was in that letter that we
part of-
requested.
That's where I remember. it.
Yeah,
It
but
was
then
part
you
of
guys
it.
refused. You said you couldn't come and
Oh,
answer the question.
Okay, that's where I recall that. And we do have a number. I can call the treasurer.
How much
and
have
find
not
out.
been cash, right?
Correct.
Yeah.
I can get
Yeah.
the most recent one.
That's-
The policies and procedures.
For, what do you do with
That's
those
what
things?
we're planning to do too.
Oh, okay.
Yeah.
But you tell me
But that
we-
again
next
is-
week we'll
Okay.
get that.
And that's part of the unclaimed checks.
Right,
That
right.
we record as a liability. That's,
Yes.
yeah, tax refunds.
Sure. Yeah.
We'll provide that as well, yeah.
Okay.
Kathy, one of the things that the department kept saying that the reason why there was such a huge deficit was they were having to pay 40 million of outstandings from the prior year when this administration started. Do you remember that, that assertion by the department?
I believe so, yes.
And they were saying at that point that it was 40 million of prior year obligations that they needed to pay, I think it was. In the 2010 financial statement by the OPA, your accounts payable was 83. In 2011, your accounts payable is 85. It doesn't seem to be going down inside.
I'm talking about most recently, we
I'm-
prepared the March, so it's tracking less than 70 million, so we are paying down our liabilities. But like I said, the 88 or 85, 83 million comprise of all the liabilities, including the stale-dated checks for, like I said, child support, tax refunds, and those numbers are significant. We can provide you a detailed listing by category type. That way you have a better understanding of what the 80 million comprise of.
And then,
Because you do have a, like,
what you've paid from this year?
yes. Because, what's included in the 80 million is the temporary reduction of the retirement contributions, which Doris was talking about, that 6.4 million.
Right.
So you know
Which-
these numbers, they just,
Which was all paid back already with the
right,
bond.
right, right. So we're
And
talking about
I guess the other
2011.
liability is the GMH and DOE.
Yes,
They
yes,
have been paid
That,
off.
that again,
Yes.
I
That
got
for sure.
confirmation
Yes.
Yeah.
from Diana at retirement.
Yes.
That's paid
that's
off.
been paid off also.
Yes.
And that will relieve them.
That's the
Yes.
first item
Yes.
we did.
Yes,
Most
yeah.
recent bond issue, so.
Okay.
so again, it- it's a snapshot, it also
But again, that's
includes-
not from this year's collections, that's from bond proceeds.
Correct.
Right. It also includes like the pharmaceutical fund, which is funded by general fund. So again, we'll provide you a better picture of what the total liabilities comprise of.
Okay.
As of September and March, yes.
Okay.
So it's-
Okay, thank you very much. Carl, the next item on the agenda is your presentation of the, how much debt we can't borrow anymore?
I beg to differ, Mr. Chair.
We got 10 million?
The number says $10.7 million.
Oh, okay.
Yes, what I've provided for the committee, I hope you guys all have a report. It's essentially just a page out of our the GITA debt abstract. The first page, and this is sort of the trigger for our debt ceiling calculation, is the letter from Mr. Camacho, Director Camacho, on the real property tax assessment roll, which came in at 11.4 billion approximately. That's when we start putting the calculation in, and so at 10%, that gives us the total debt ceiling, 10% of assessed value at 1.14 billion, and then we have it broken down by issue and even further into categories of general obligation debt and limited obligation debt. And so, you know, those are broken out. Active principal balances, this is as of July 1st of this year. Total for GO debt is at 482.1 million, and the limited obligation debt is at 646.6, giving us a total debt profile for GO and LO at 1.13 billion. And if you back that out of the debt ceiling, that essentially gives us the $10.7 million in available capacity for borrowing.
Okay.
You indicated, Mr. Chair, on your agenda that you wanted to highlight the either the authorized or approved financings that were going to be off the debt ceiling. So, I mean, I didn't highlight that specifically, but if you look at the approved financing listing down below the calculations, it's going to be the final three, starting with the EOG Student Services Building, followed by the Okudu Expansion Project, and then the most recent Public Law 31-229, I believe started as Bill 437, which would address the all of the DOE schools. Now, not all of them started as off the debt ceiling structures. A couple of them, the first two that I mentioned, the EOG and the Okudu, had to sort of been restructured to not to affect the debt ceiling, be lease-back structures. So,
Okay. So basically, what we're looking at is that while the debt of the government of Guam, as controlled by or allowed by the Organic Act in terms of the limitation, is that that ceiling's already been broken, or will be broken, by getting a little bit more creative and doing off-balance sheet or off financing.
We already have that now.
Yeah.
Yeah, we already have that now with the two schools,
Mhm.
JFK
JFK
and the, and Okudu.
Right. Now, while we, they're off the debt ceiling calculation financing,
Right.
they're not off the general fund repayment stream.
no.
That's right.
So, while the debt ceiling was put in place to ensure that we didn't incur debt beyond our capacity to pay, based upon that, we've gotten creative and gone beyond that. So,
Yes, yeah, essentially.
yeah, so the only debate really that's ever going to occur or should occur is, can we afford it? Can we afford to repay it? Not can we afford to borrow it, but can we afford to repay it?
Right.
Okay.
And, you know, in our role at GITA, we've just been asked to find ways
Sure.
to do it off the debt ceiling calculation.
So I guess the most recent, Steve, the most recent decision to move forward with Okudu expansion, is that going to be accounted for in the budget in terms of repayment?
Carl, I'm not too sure, Senator. I'm going to have to check. I'm not quite too sure on that.
No, we decided to move forward on the Okudu most recently,
Right.
right? But the repayment's going to have to come from the general fund, but that's not being factored into next fiscal year's budget. Is that going to be a?
The way that
are
the
we
structure,
deferring that again?
well, the way that the structure is set up, the payments don't kick in until full occupancy.
Okay,
And so
yes.
I've got a meeting with the new superintendent of DOE, just scheduled this afternoon for next week.
Yeah.
So I'm just gonna kind of get him up to speed on, the intricacies of the financing deal.
Right, so we don't, what I'm saying is that we don't have to account for the debt service of this in this fiscal year 2000.
Correct.
Okay.
Correct.
Okay, I just wanted to verify.
Yes.
Yeah.
And the only, I just wanted to point out, the only other thing with the sheet that I furnished you today versus what you're going to see online is we omitted the Guam Institute of Cultural Heritage because that was folded into the hot bond, that approved finance.
Carl, what, for the upcoming budget year,
Mhm.
how much are we going to have to set aside to pay for all of these obligations that are outstanding?
I have that number here. For fiscal 13,
Including Okudu and
JFK.
JFK.
yeah, Okudu would not
Okudu
be
Oh,
affected,
okay,
right.
JFK.
So it's on the next page after that summary sheet. On our debt abstract, I'm sorry, I didn't include it.
He just brought us the debt, not the payment.
Yeah.
That's why I asked.
So just by comparison, this current fiscal year was at 59.4. For next year, it's going to go up to 70.4, 70.5.
You have to find $20 million more.
And that,
9 or 15.
59 for this year?
Oh, I'm sorry.
It's only
10. Only 10.
Yeah, the biggest increase came by way of the Section 30 bond.
Okay.
And JFK is not until when?
JFK is, full payment will be for this upcoming fiscal year.
And that's 6.6, right?
It's the 5.1 plus
Plus
the additional rent.
maintenance. The
Right,
main-
right, which is insurance and maintenance.
And that's $1 million something, right?
1.5, I think?
Yeah.
How are you taking into account the Teads facility?
The Tizen facility,
Is that-
I don't
That's
take that into
tax.
account. Yeah, that's a tax credit.
So that just, that affects the,
No, no.
John, do you? is
It
there
comes
a
from
report that-
somewhere.
Do you report tax credits someplace? The effect, yeah, John doesn't, that's not, so tax credits that are offset are not in the actual cash?
Way back, if you remember, they were adding back the HCTC.
Right.
There was a slot on the bottom, maybe 4 years ago. That's how they were actually doing it. But this one doesn't really show that.
No,
I think, Doris, is your question, is the accounting system accounting for the tax credits?
The
Are we-
accounting system is accounting, but I don't think this number is.
Oh, I see.
That's my point. I think the overall is at the audit level. This is, as opposed to below the line, this is above the line.
In the budget that we account for.
The
Yes.
tax credits
Yes,
4.6 million
for, okay, for
yes,
TDIP, right?
correct.
It was in the last one.
It was in the last budget. We put it,
But there's a higher amount now, so I'm just.
yeah.
Yeah, we can furnish that number, and we administer the tax credit program. The requests come in, we just keep a running balance, and then issue the memo, and then John's folks process it.
I noted in the report that I got from your department that Cortec was listed as being non-compliant for 2010.
That was an affordable housing, that was one of their, I believe, one of their affordable housing QCs.
And do they get to, if they didn't build any affordable houses last year, but built 6 roadways and a lease and property, but no affordable houses, do they still get the tax credit?
No, that's,
Or is it just the
it's
tax credit,
specific to,
just,
specific to that, that development, that affordable housing development.
they must have been building lots of affordable houses that I haven't seen.
I believe there's only, and I'm not sure, don't quote me on it, but I believe there was only 2, you know, one of them has been fine and compliant. There's just issues with another one of them. I think there was
But even with
one
the
of
others
2.
that are on that list, that as, just so we know how much, when the department finds them to be non-compliant,
Right.
do they get to take advantage of their
Absolutely
tax-
not. Absolutely not. The only way that they can avail of the benefits of the QC is when they receive a certificate of compliance from GITA. It's only at that point where they're able to process.
But when
That
do you
revenue
do, when do you do the compliance? Because the report that I have shows that the last compliance designation was for 2010,
For,
on the list.
right, so we did that in 2011 for tax year 10. And so this year, we're doing, in 12, we're doing for 2011.
So for the 5 or 6 that are there that were non-compliant,
Right.
would they have been able to, would they have had already 12 months of gross receipts that they weren't paying because they were QC recipients, and you're going to collect it at the very end of the year,
Well,
or
not-
some
not-
of you don't?
Not all of them are like GRT abatements. The only ones that are GRT abatements would be the insurance companies. But for everything else, they're rebates, so they have to pay the tax, they get their certificate of compliance, and then go to Rev and Tax to get it rebated, get that amount rebated. And, you know, I mean, they can process it however they can cut them a check, or they can just apply it to
Oh, so
the
they have
current
to
tax
pay
year.
it first
Right.
and then get rebated?
Right.
Except
On the rebate, except for insurance companies which have GRT abated.
Then how would some companies be able to be selling some of their tax credits?
That's different, the tax credit versus the QC?
Yeah, I would have thought that was as a result of their, which, no, I understand, but where would those have come from? Wouldn't they have to pay their taxes before it was rebated, or how did they get the credit before?
they submit.
So they're selling,
Yeah, we're talking about a tax credit now, right? Okay, yeah, the tax credit, they have a specified amount up front, and so, you know, let's call it $1 million, and so they come in and request, or they can sell a portion, or however much of that $1 million, you know, assign it. That comes into GITA, we review it, we keep a running tally of the amount available, and, you know, if everything checks out, at that point, they're issued the certificate, a memo that they take up to DRT and have processed, the credit processed. So it's all done in advance, and then they take it up for processing.
I think we gotta distinguish, one is, there's an amount that's allowed by law, those are the ones that are subject to sell. The other one is strictly driven by GITA, saying that you're qualified for 100% income tax rebate, or tier 2 rebate, or abatement. And that's what earlier was he was talking about, if they're not compliant, then they don't.
yeah, but then how, wouldn't they have to have paid their income tax and then get a rebate?
By law, any company that is in compliance, and we receive that compliance from GITA, then we complete the amount. Yes, income tax is to be paid first before it's repaid.
Yeah.
Okay.
In other words, if it's a corporation, the corporation says, I pay $1 million, and the
Yeah.
rebate is subject to no restriction, $100 million, in that particular will be rebated $100 million.
Yeah, I think we're confusing two different issues. I mean, there's the tax credit and then the QC benefit. And, I mean, we can certainly, you know, arrange a sit down so that we understand, absolutely.
It's two different things.
No, I understand, but I'm just trying to figure out how some of these, what's being sold out there or exchanged for.
But I just want, I mean, rest assured that a non-compliant company cannot receive and does not receive any benefits as stated in the QC.
John, one of the final things I wanted to kind of ask you is there been anything, any additional information on the make-work pay credit?
I think that the estimated amount paid back is still roughly around 11 per year, 11 each, 11 million, to be roughly around $22 million. I think there's another estimation that was brought up, 24. So it could be 22 to 24 million dollars that we have to pay back.
Total,
Total, yes.
total, and we have to do that over how many years?
Well, there's an MOU, and I think Tony or Kathy should be, as far as funding the return, I'm not too sure how that's going to be done, but I think part of the MOU basically, yeah, in the event that we cannot pay the full amount by January 13, we can work something with the feds, so we can at least have a payment plans or something to that effect, where it can be subject also to future revenues that we will receive. In other words, if we actually going to see ACTC or what, they can just probably take that if we can't, right? I mean, this is something that's available on the MOU.
And so the first, or the MOU says that we have to pay it back by January 2013.
That is correct, yes.
Right, so you knowing that, Tony knowing that, was that translated to the people who prepared the budget, and is that accounted for anywhere in the budget? Could be 22, 24 million if it's a single payment, could be 11 million. I thought the MOU allowed it maybe over three years, I thought, maybe not. It didn't specify, right? There was no specific, but they said that they can take it from next year's advance, so they could come out of Section 30.
Yeah, because that's
Yeah.
Yeah.
when we had an overpayment of Section 30,
Right.
it took about 4 years.
4 years to
Yeah,
Yeah.
to repay
So,
direct
and-
before.
Yeah, and that's why I was asking John if there been any additional information or update on that, because if the MOU gets executed next year, 2013 January, you know, or October of this year.
I'm not too sure how it's going to happen, Mr. Chairman, but I'm just giving out what's available.
Sure.
In
Right.
other words, the payback can be spread out or through any reimbursement that we're requesting. That's all I'm saying.
Right, but if it's going to kick in, but if we're going to be conservative and plan for it, based upon our agreement when we took the money, was that if any money was not paid out, we got to send it back, and the date to send that back is January 2013. Are we contingently planning for that? Is there a special reserve line in the budget? Is there a, you know, is it accounted for, and are we putting in, are we, you know, booking that payable for 2013?
It will be a liability to the government, yes.
Yes.
There's going to be a debit to revenue,
Right.
credit to liability, and I don't believe that liability has been recorded yet. Yeah, it will be recorded, once it's fully known, it will either be recorded as of 2012 or prorated.
Right.
Yeah, okay, so,
So I'm just saying,
portioned.
so
Yeah.
I'm saying, are they
Oh, I-
accounting for that in the budget anywhere? Is my-
Well, I think, well, if you're already assured of the number is 20-some million?
Well,
Yeah.
well,
Are
the thing about it is it's for 2009 and 10.
Yeah, so then the
So,
liability's already
right,
owed.
most of the
Yes.
returns have been filed, so the
Yeah.
amount of the claims that are becoming are going to be very minimal.
Yeah, we
so-
already know we owe,
Yeah.
at
Yeah.
the minimum, 22 million.
So that liability
Towards
has not yet been recorded as of 2011.
That's
So it has to be recorded as of 2012 because it's a past liability.
Yes.
So that's going to increase the deficit by that amount. already, off the top.
On another note, Tony, do you recall paying $250,000 a month to the Federal Bureau of Prisons?
That debt has been slowly amortized. Most of it is almost paid off.
It is?
Yes, it's, there's an arrangement, because it was originally in 2010, we owed about 9.5
October,
million.
yeah, and it was supposed to be.
And then we've been paying it off, and it's been on a regular plan. In our audit back in January, or the one we did for you, we acknowledged that, and I think, Kathy's not here, but I think it's less than a couple of million left. We are slowly paying that off.
Yeah, Senator, I can give you the information on that.
Okay.
Maybe
Yeah.
in-
If
in-
No,
not
because
already.
it was only
Yeah.
through that
Yeah.
that I also noted in the letter from Federal Bureau of Prisons when the request was made to try to just forgive us for that. We were told, no, we can only take your prisoners if you're going to reimburse us for the cost. And since you owe us $9 million, there's nothing we can do except to send, I think they already sent it to IRS, to tell IRS to take it off the top from what we owed, what was coming to us, and that's the reason why we signed the MOU. So I'm just wondering if we completely paid it down, or is there still an outstanding, and trying to stop it.
Almost-
It would
Kathy's not
seem
here.
to,
They're still.
Whatever amount
It'll be
is
paid
almost
off-
minimal, yeah.
It's paid off in this year's budget.
Yeah,
Yeah,
but
we're
it,
saying-
it,
At the end
it's
of
going to be
this year.
probably before the end of 2012, should have been
Yeah.
all paid off.
That's what I'm saying. Well, I'll give you the accounting
Yeah.
information
Yeah.
for you next week. Because I saw that.
You know, Tony, I just want to go back, and again, I told Kathy that nothing much has changed. Same staffing at DOA, same professionals, and we really got, more timely reports in the past, and I'm going to challenge them with all their challenges to not, even go forward, but just go backwards in terms of, the timeliness of the report. So see what you can do to contribute to that.
Whatever we
Okay.
can give you,
Yeah.
Mr. Chairman.
Okay, because I hate to say that we're just going to settle for not getting reports because we have an outdated financial management system when we really were pushing some reports out, even with the same financial management system.
But you weren't getting the financial condition. That,
Yeah. Then we were,
a trial balance is different from, yeah, like that, yeah.
We're not getting that now,
Oh,
is what
okay,
I'm saying.
that I don't, yeah. I don't even like to get a trial, that's too many accounts,
Yeah.
yeah. And stuff, so, but the financial condition is really, and that only started with fiscal year 10, when it was around 70-some million, then fiscal year 11. And so we really need to get something in fiscal year 2012, at least as of March,
Yeah, so,
or probably even June, right?
yeah,
Yeah,
better June,
better June, if we can.
okay? All right. Chris, do we want to set the next meeting? Yeah. We just want to get one final meeting before the budget.
When is the schedule for?
We're finalizing, we've got hearings next week. Yeah. so. 31st?
I'll be off by then.
When do you come back?
The 6th?
And we have something, Doris.
Don't do it on the 8th.
Doris, we have, Doris with 2 days.
Oh.
Doris-
Well, we all, we'll have cake and ice cream. Out of my own pocket.
Hey, Doris, Doris.
DJ and I will buy the,
Doris.
Thursday? Okay. All right. 9th.
I won't be here, but I can send Marie.
Let's check us out.
Wait, let me
We
just
have,
check my calendar.
we have an OPA thing, yeah.
He's reminding if we have the appeal, just a moment.
Yeah,
Okay.
there's something going on at the
Oh,
same time.
you got a good memory.
I
Oh,
know
no,
s-
no, no.
it's
That's
a-
not until the 13th.
Okay,
Okay. Okay.
No, 13th's kind of too late.
yeah, okay.
Yeah.
What time on August 9th?
August 9th?
Yeah.
What time on August 9th?
We,
We get-
we'll,
get
we'll
that?
we'll send out a notice and get your,
August 9th?
We're looking at maybe the 31st, 1st, or 9th.
and then have a
Or maybe
follow-up
both.
meeting after,
Okay.
yeah.
Okay.
Okay, so either the 1st or the 31st.
First,
Yeah.
August 1st?
August 1st. Okay.
Okay.
All right.
Just prepare ourselves.
Yes.
okay?
August 1st, that's good.
Yeah.
next year.
Yeah, you guys work.
Okay.
Not August 8th,
All right.
because we have something.
I want to thank all of you for your presence and your contribution today. Thank you very much. It's a good meeting. So
As soon as possible.
we'll adjourn until August 31st, and we'll send out the notices. July. Is it August 1st or 30th? August 1st. August 1st. August 1st. August 1st.
I'll be off my.
Yeah.
update on employment and everything at the next meeting,
Yeah.
like you did for the
Like-
previous? Just so basic. I really want to listen.